Navigator with an update here in the euro dollar. So you can see it's trading at the minute at 121. We had a reversal yesterday. So yesterday we had ADP jobs report. Today we have unemployment data coming out at 8:30 Eastern time. So what that's going to do, bottom line is the euro dollar is probably going to move in one direction or the other. So we've hit a critical support area. So just kind of the short-term trend is fairly obvious. It's really it's been in this bullish trend, if you like. And what that means in layman's terms, the dollar was been weakening versus the euro, but now we're at this, I suppose, pivot point. It's a question of today's data. Does that actually cause the currency pair, the dollar, to weaken again and start going up here? Or do we break down and start finding new support areas? So just clearing them out of it. Where are those support areas? So if I was to come in just on this 1 year chart, that's your resistance there, 122.50. You can see it's hit it, quite a bit before, 123.50 just above it. There are your two resistance points. So if we break above 122.50, I'd expect we go to 123.50. Then on the downside, you can see 120 is a real significant area. It acted as resistance back here, support here, support here, support here, resistance then, and support here. So 120 is a critical area. And then below that you have this 200-day exponential moving average at 119.29. So how would you potentially trade that? We don't believe in trading currency and leverage at all. So just, if you have cash and you want to swap out of euros, what we've been doing is basically buying the dollar on the highs and just closing out. So for example, we bought the dollar about 4 or 5 days ago at 122.50 and we closed out yesterday at 121.10, in and around that area. And that's pretty much a 1% gain in a week. So not a bad return. So that's what we've been doing. But today I would wait for the jobs data to come out. One or two things is going to happen. It's either going to do this again, and if it does that and breaks 122.50 and goes to 123.50, I would buy the dollar. That's what we're doing. And then on the flip side, if we break down below that 50-day exponential moving average, you got to be patient and wait. If 120 holds, then you do nothing. But if 120 gets breached to the downside as well, in other words, if we trade down below here, then you could actually look at buying the dollar again, because that uptrend is then over and we're potentially in a sideways position. If we look over a longer term, you get a better view. You can see here, over the last 5 years, the dollar has weakened to 125. That's it, and we're pretty close to that at the moment. And another thing to consider, with most brokerage accounts, you're getting an interest rate for holding dollars. You're not for holding euros. In fact, you're probably getting a charge for holding euros because of the overnight lending rates. So just bear that in mind as well. So my own view is that if the dollar gets anywhere near 123 to 125, buy the dollar with a view to, I suppose, closing out of it, changing it back into euros at around the 120. And that can be a 1-2% swing every time. So as it stands, news announcement today, it's going to move the needle in one way or the other. You don't trade before that, you wait, and if things change, well then at that point in time you can make a decision. Anything north of 123 is buy the dollar, in my opinion. And then if we break down from this trend and start breaking below 120, it could be another signal to actually buy the dollar, and we'll send another video out if that event occurs. Okay, this is Stephen from Share Navigator. Thanks and bye for now.